Okay, good afternoon, traders. Good afternoon. My name is Raul Rivera. I'm the founder of themarketprofile.com. Today is August 14th, Monday, August 14th, 2017. Let's get started with today's trading. North Korea did not throw out any missiles. They did not launch any missile tests. No seismic activity over the weekend in the Korean Peninsula. Just nothing really, and that was positive for the markets today. As we can see here in the S&P 500, we did trade to the upside, gaining most of the losses that were generated during the bloodbath on Wall Street here, where we lost nearly 2% of the stock market's value, even though 2% at where we're currently from, right here in the 2400s, is relatively small and not really um, dangerous enough to induce some sort of high volatility and a type of market crash type of environment. But it did increase volatility, and today, Friday plus today, we began to crush it. Today volatility, I believe, was down somewhere in the range of I'll show you right here. Volatility, VIX down 20%, $3. We started the day off around 15. Now we're around 12. If the market continues to rally as we expect it to, it should go back down to where we were. The market dipped. All the buy the dip community is long the market, and I do expect the new all-time high to be made within either this week or next week. That's always been the case. Every dip gets bought, and every time there's a dip of 2%, at least 2%, we always rally back to new all-time highs, and volatility remains low for a prolonged period of time. Okay, so looking at the S&P 500, I was still looking to sell the market rather than buy it. There were two ways, two different trade ideas and methodologies we could have applied here in the S&P 500. The first one is the trend trade. So I'm going to switch here to the hybrid view. I'm going to zoom in. Oops. I'm going to zoom in here as much as I can, and that should be good enough. So recognizing that today's distribution was a P shape with an extension higher followed by a P, the idea was to find a place to buy it. So the trend trade is the trade of choice for this type of trade, and we use VWAP and TWAP, so volume and time moving averages, in order to achieve best possible trade location. Here in the S&P, I decided to ignore this trade and I went for the short using value areas. And of course, the trade of choice happened to be right there around the 24.52 half, 50, close to 53. That was the area to start buying the market. And as you can see, we did trade as high as 66. Would have been a pretty fantastic 13-point trade if you if you enter at this low and exit at the high, which it can be done. Very few people were able to do it. But it's you got to get extremely lucky to really capture the absolute high of the day. Along here in the room, we probably would have looked to exit inside this zone, which was the zone that we were trying to sell. I always try to be as transparent as possible, so I will show you my fills here. I got short 7 contracts inside the zone that I was looking to sell. Multiple contracts, and then bought them back at 62 half, which happened to be just good enough for 1 point profit. The market just did not want to sell, the first dip under my break even, I had to act. We can see here at the low, bottom right of the chart, positive 26,000 imbalance, with the 50 to 2,000 lot trader with an imbalance of over 10,000. Okay, that shows buying from the institutional traders. This shows buying in the overall market, institutional and non-institutional all together. And selling a market that traded higher and consolidated, which is a P shape, is usually not a good idea. Um, and we should try to, the market should sell off um, within a pretty speedy amount of time. But the fact that it consolidated for most of the afternoon session was red flag number one. A P shaped distribution is a trending up pattern, and the idea is that it can retest the high or trade higher. So with that mindset that this could trade to the highs or even higher, I had to exit the positions that I took here. So moving over onto the profile view, we can see here my fills. 7 contracts total began at 62, then 62 half, 63, 63 half, 64, 64 half, and then 65. Average came out to 63 half, took off my 7 lot for 62 half. 1 point profits, about 350 bucks on this day. So we had a profitable day today, but it was definitely a struggle and a grind to get those to get that $500 today. Okay, looking at the crude oil market, very strange. Early this morning we had news that something out of Nigeria lifting exports. I didn't look into it too much, but the market got a pretty big spike off of that and then completely sold off. Here we can see when the news hit the market, right there on this bar. We literally, prior to this bar here, we had about, I don't know, 46 total imbalance. At the high of this bar, we had right here, we saw positive 3,600, and look at what happened towards the end of the day, negative 12,743. Pretty crazy trading session, if you ask me. The market definitely did move a lot here today. Unexpected, but news out of Nigeria, I think, is what did it. So early this morning, we were looking at an inside day here. Here's previous day's range. Okay, so we're trading inside of it. The idea was to get long below value with single prints, which around 9 a.m. we were able to do that. I didn't take advantage of this trade, but this trade was good enough from 37.39 as high as 49.15. Okay, that's the high of the day. Really decent trading there. I'll show you guys my fills on the trades that I did take. Because it was an inside day, I figured I'm gonna get short just above the high of the day, which worked out well, and that's when the news hit the market, and the market did trade higher from my initial entry location, only to fill my adding position at 49.15. So here we can see sell number 1 was 48.95, sell number 2 was 49.15, for a total, I believe it was 49.05. My average, my cost average on this trade. I took 1 contract off here at 48.63 for 42 ticks profit on 1 contract, and then I took off my second contract at 48.30 for 75 ticks profit. And this is possible, guys. This is completely possible. Using the market profile strategy, we can generate anywhere from 20 to 120 ticks, no problem, on any given day in the crude oil market, right? And we can achieve this with as little trades as possible, which is the more remarkable part about the market profile strategy and the methodology. Very powerful stuff. I definitely invite you guys to come check it out on www.themarketprofile.com. We've been trading really well lately, and we continue to do so. Okay, so here, a little lapse in concentration. When we take a look at the market, right, I'm always preaching about the market's short-term memory, and which side of the trade we really want to be on. Okay. So I mean, as you can see, this is one of the reasons I never show my fills until the end of the day when I'm doing these videos for you guys. I mean, look at the clutter, right? It's a lot of clutter. All these positions I've taken over the past, too much. Anyways, if we look back from for support levels beyond this one that I marked early this morning, there really aren't any. Okay, and this is where I had a little misstep in concentration. I should have not had a large position placed to the long side in today's market simply because of the lack of support to the downside. And as you can see, the market did trade lower by quite a bit. There wasn't too much support, if any, right? To the upside, we have plenty of levels of resistance. We have plenty of historical data here and value areas to base our trading off of. So I had a little misstep there in early this morning, and I put a too large of an order right here. So I got long 5 contracts for an average of 48 and a quarter, 48.24 to be exact. And I ended up selling my position, so you can see here, at 47.96. This was a 28 tick loser, good for $1,400 loss here. And this is unfortunate, just a little misstep in concentration. I could have avoided over leveraging on this trade. No matter what, it would have been a loser, but it could have been a much less of a loser in this trade. So big day to the downside here in crude oil. Tomorrow we should be expecting to trade on the short side of the market rather than on the long side. Taking a look at gold, I had a really fantastic trade on this one. We decided to go with the trend trade. When we look at the profile view, it becomes evident we have a double distribution. What's going on here? Let's split the distributions apart, and what we have here is a B followed by another B. Okay, so we have 2 trending patterns on a single day, which means we're definitely in a selling position here. So we're looking to the short side and we're trying to exit at the lows or better. Okay. We did not get the lows, but we did get really good trade location. Switching back over to the hybrid view, looking for the trend trade. We're always looking to trade VWAP and TWAP, okay, volume and time. These are the trade locations when we have B-shaped distributions. So the market traded lower, came into VWAP and TWAP. I sort of met in the middle here at 1290.30. That was my fill. I only trade 1 contract on these trend trades because there is a higher amount of risk involved in these types of trades. Let me pull up my fills here. And here we can see my fill, 1290.30. It took 1, 2, 3 hours to become profitable, but we know once we enter the market, we're probably gonna be in a position for the rest of the day, or we get lucky enough to exit our positions very quickly. Sometimes the market, if we're short, sells off faster than we really expected, and we take profits fairly quickly. Today we definitely had to wait quite a while for this breakdown here, but it did come. So 1290.30, market traded as low as 1286. I took my position off at 86.30, pretty much towards the low of the day here. Good enough for 4 points of total profit. 4 points is the exact same thing as 40 ticks, which on just 1 contract is equivalent to $400 in profit here. So even just with 1 contract, okay, even just with 1 contract, you know, a lot of people will say, you know, it's hard to make money with a small account. I challenge you to say that in my room with my strategies. Okay, even with a small account, just trading 1 contract at a time, there's definitely potential to make a decent amount of profit on a lot of our trades. So trade setups are statistically proven. They work. Okay, so that was it there in gold. Looking at the profile version though, we were actually looking to get long 77 to 70, 77 to 79. Of course, the market did not sell off that much. Looking at the 30-year, boring, boring, boring. We waited for a trade, it never came. We were looking to get long 16 to 20 and short 20 to 24. So you can see the market never even made it to any one of those levels. Next up, we have the Nasdaq, and this one, again, I did not take any trades in the Nasdaq over the past couple days. Over the last week, I had some really great, fantastic trades in the Nasdaq, and then I also had some pretty bad trades. Okay, so the Nasdaq's never really been my trade of choice, but since it was working out for me last week, I decided to keep trading it. But the Nasdaq has a bit of a mind of its own, and if you didn't know, the Nasdaq futures are the same as the Nasdaq 100. Okay, the Nasdaq 100. And the Nasdaq 100 is mostly comprised of what? Tech stocks. Okay, so if tech stocks are moving, if investors are buying tech stocks, the Nasdaq is going to outperform the S&P and the Dow Jones. If they're selling tech stocks, they're going to immensely underperform the Dow and the S&P. The S&P 500 is more balanced, right? It has almost every sector in the market. Meanwhile, the Nasdaq has mostly technology stocks and biotechnology stocks, and stocks that have a lot of momentum in them. Whereas the Dow 30 is a balanced portfolio of 30 stocks, and the S&P 500 is a balanced portfolio of 500 stocks. So there's definitely more respect when it comes to market profile levels in the S&P 500 and the Dow. The Nasdaq likes to stretch its legs a little bit beyond what we would be expecting. So here in the Nasdaq, we were looking to sell 58.90 to 5900, as you can see. We weren't incorrect in the area that we thought the market would consolidate in, or at least sell off from, but it was a little bit higher than what we were really expecting. The Nasdaq does that. It loves to stretch out its legs. That's what happened here on Friday. We were short in this area, but it decided to stretch its legs even further and consolidate in this area. So I'm staying away from the Nasdaq for the time being until things seem to be a little bit more normalized, or I come up with a better solution with the value areas on where to place my trades on the Nasdaq. But looking at the Dow here, this is going to be the last contract I take a look at. P-shaped distribution, much like the rest of the indices. And as you can see, we labeled an area here early this morning. We were looking to sell 21,980 to 22,000. 21,980 to 22,000. I think the Dow is going to be my next candidate to replace the Nasdaq. So you guys know I always trade the S&P 500. That's my favorite contract. Well, it's my favorite contract, but I've been really liking crude oil a lot more lately, just because of the volatility. And crude oil has been consistent versus the S&P 500. But the S&P 500 is usually my absolute favorite index to trade. So I'm going to replace the Nasdaq with the Dow, because the Dow seems to respect these areas a bit more than the Nasdaq. And we were looking to sell 21,980, 22,000. Lo and behold, that happens to be the absolute high of the day, and it did trade as low here as 21,040. So from 80 to 40, that's 40 ticks or 40 points. Okay, 40 ticks or 40 points. The Dow, the way it's constructed in the futures, the way it trades is 1 tick equals 1 point. So 40 points. If we want to take the equivalent and make it something more recognizable, 40 points is the equivalent of 4 points in the S&P 500. So 40 points, not too bad of a trade here. Definitely respected the value area and sold off from those levels rather quickly. Looks like we only have 2 prints at the high. So that was the trading for today, guys. Profitable day. I did manage to eke out a gain of $520. Could have been a lot more if not for the crude oil long trade. But it is what it is. A gain is still a gain. Can't get mad. Those are the cards that were dealt, and I took the trades as they came. I never chased the market. I let the market come to me, and definitely had some pretty good trades today. I mean, we had three winners and one loser. I mean, it goes to show, the strategy is still working. It's just a little bit of tweaking in my own self on the execution after the entry. The entries are perfect, and it shows. 3 out of 4 is perfect for any trading day. But the execution, minimizing your losses as much as you can. That's where I sort of have to, review in my head what I'm going to do tomorrow. How am I gonna minimize my losses and maximize my wins? Because I know the strategy is working. Now it's up to me to manage these positions to the best of my ability. Alrighty, guys, so that's all the time I have for today. I hope you guys enjoyed the video. If you did, make sure you guys click like here on Facebook, or give us a comment. Let us know what you thought of the video, or if you have any questions, please feel free to comment on the video as well. If you would like to find out more, please visit us online at www.themarketprofile.com. Sign up for the 14-day free trial to the trading room. See what I'm all about. See me trade these positions live, and I definitely encourage you guys to just at least come and check it out. Alrighty, guys, good luck with your trading for tonight if you're a Forex trader, or we hope to see you tomorrow in the live trading room. Thank you, guys, and have a good night.